Hello traders, I'm Luke from Disciplined Trader. This video is part of the Trading Basics series, and in this one I want to talk to you about having a trading edge. Although there are many hurdles a trader must overcome in order to become consistently profitable, a key component many newer traders overlook is their trading edge. For me, your trading edge is your holy grail. You see countless traders looking for that special indicator or that magic signal that doesn't lose, when the answer to any trader's success is much simpler than any of that. Your trading edge works for you in the markets in exactly the same way a casino makes money. Let's look at a roulette wheel for a second. We know that if you were to bet on red or black, you get odds of 1 to 1 or evens. Essentially, you lose or double your stake depending if the bet wins or loses. If you were to bet on one of the thirds, you would get odds of 2 to 1, and if you were to bet on one of the individual numbers, you would get odds of 35 to 1. However, the casino retains an edge in all these bets through the zero on the wheel. The zero doesn't fall in either category on the red or black bet, isn't included in any of the thirds, and isn't included when calculating the odds for a single number. Thus, this gives the casino a marginal edge on any bet placed. Now obviously the casino could lose on any one bet, but over many bets the casino will be up, because of the marginal edge that it has. Let's take the red or black bet as an example. The punter gets odds of 1 to 1, which equates to a 50% chance of success. However, if you were to bet on red, there are 18 red numbers and 19 non-red numbers, 18 black plus the 0. So your chance of winning is 18 over 37, or 48.6%, not 50% as the odds suggest. Now if someone bets £100 on red, obviously there is a good chance that the casino could lose that bet and be down £100, but their edge really works its magic when it's applied over the long term. If the casino takes £1,100 bets on black or red, then it would expect to lose 48.6% of those bets and win 51.4% of those bets. So 48.6% of 1,000 bets would mean they lose 486 bets, and 51.4% of 1,000 bets would mean they win 514 bets. Multiply both those numbers by the stake value of £100, and the casino loses £48,600 on the losing bets, but makes £51,400 on the winning bets, leaving them with a net profit of £2,800. Therefore, the more bets the casino takes over time, the greater their profit will be because of their marginal edge. A trading edge works in exactly the same way. If a trader uses a system that gives them a marginal edge in the markets, over the long term they will make more money than they lose. Of course, as with the casino, when looking at one trade in isolation, it could win or it could lose. But a good trading system doesn't depend on whether it wins or loses on one particular trade, but whether it yields a profitable return over a large number of trades. So let's look at how a trader's edge is constructed. It comes from two key components of the strategy they are using: the trade success rate and the average risk to reward ratio on the trades taken. The trade success rate is how often a trade will reach its predefined profit target before reaching the stop loss. Essentially, how often a particular trade setup wins. The average risk to reward ratio shows the average amount of risk taken across all the trades compared to the average reward targeted or realized across those trades. Both of these components are equally as important as each other. However, I think some traders have a tendency to get obsessed with only their win rate. They want a 90% success rate, or they view the strategy as a failure, when in reality that's not the case at all. In fact, you could have a strategy with a 30% success rate and still make money if your risk to reward ratio is high enough. For example, if you have a risk to reward ratio of 1 to 4 and a success rate of 30% and risked £100 on each trade, over 100 trades you would expect to lose 70, which each lose £100, which totals £7,000 in losses. But you would make £400 on the 30 trades, which totals £12,000 in profits, which leaves you with a net profit of £5,000. Ignoring the power of your strategy's average risk to reward ratio is a mistake you shouldn't be making. Understanding that these two components work in tandem with each other is very important to understanding why and how your strategy makes a profit. However, it is worth noting that other factors do come into play in the real world. For example, when you have a low trade success rate like 30%, that means you will have to endure over 2 times more losing trades than you will have winning trades. If you are someone who is easily frustrated and annoyed by losing trades, using a strategy with a low trade success rate may not be a good decision, as it is very easy to let your emotions take over and have a detrimental effect on your performance. So it's good to weigh up the real world pros and cons of a strategy, as well as assessing how likely it will perform on paper. Now, how to actually decide on how you enter the markets and at what levels you set your take profit and stop losses will be entirely down to you. There are many strategies used to gain an edge in the market, so you need to find one that works well with your lifestyle and your personality. I'll be looking at trading strategies further in a future video within this series. And in case you're wondering how to work out your own trading edge, or the edge on a strategy you are thinking of using, then to find out you need to backtest and record your results. And when I say backtest, I mean testing the strategy over a good sample of trades. There is no point running through 10 trades and seeing that the strategy wins on 8 of them and thinking your strategy has an 80% success rate, as that's likely not the case. I would start off with a minimum of 100 trades and build on it from there. I'm going to specifically discuss backtesting in greater detail in a future video within this series, so subscribe to be notified when that's uploaded. So that wraps up this video on having a trading edge. I hope you found it useful. If you have enjoyed the video, please feel free to drop a like on it. If you have any other questions or want me to cover any other topics in future videos, please let me know in the comments down below. Also, subscribe to the channel for more videos like this one. I will be continuing this Trading Basics series to provide new traders with all the knowledge they need to get started. Thank you very much for watching, and I hope you all have a good trading week.